partners satisfy a need, and there's a real need in the financial industry. We haven't done ourselves any favour, shrouded in mystery, full of jargon and complexity. The financial industry has isolated itself from the very customers it's tried to reach. So therefore, there's room for the nimble startup. And while some are concerned that we're entering a new tech bubble, the key differentiating factors are revenue generation and a sustainable business model that's going to separate the winners from the losers. And a great quote from John Nesbitt is that the new source of power isn't going to be money in the hands of the few, but information in the hands of the many. So to kick us off, we're going to spend the next 20 minutes separating fact from fiction and also identifying exciting opportunities that are still untapped in the fintech space. So to introduce my panel, I've got Liz Lumley on my left, who is a multimedia and special projects editor for Finextra. She spent the last 20 years as a journalist covering financial technology and data. She's the host of Women in Fintech series on Brett King's radio show Breaking Banks, and the author of Smarter Banking, European edition, out in the spring. To her left, we have Anna Irrera, who is a trading and technology reporter for Financial News. She covers fintech, market structure, and trading as a reporter. She's a driving force behind their coverage of the space, spearheading the launch of a dedicated publication, Fintech News. She trained in Rio, with Thomson Reuters having attended law school. And on her left, we have Mike Butcher, who is editor-at-large of Techcrunch. He's a pioneer of Tech Hub, which is bringing tech entrepreneurs and investors together in a club environment. He's written for all the major broadsheets and a former editor of New Age magazine and the European edition of Industry Standard magazine.
So, right. Is this on? Is this on? Is this on? That was New Media Age.
New Media Age magazine. So to kick things off, separating fact from fiction, can London really compete as the fintech capital of the world, Mike? I mean, we've heard that it's accelerating faster than Silicon Valley, but what's your view?
Say that again.
Can London really compete as the fintech capital of the world?
Of course it bloody can. Excuse my language. Yes. Look, come on. It's obvious London's the financial heart of the world. And of course, New York is wonderful. We love you, but London is amazing. The question is can it maintain its position? And what's happening is that technology, and the famous phrase by Mark Andreessen, is that software is eating the world, and that we are now in a phase, we're in a very interesting phase where two parallel universes are opening up. The existing universe that most of us are familiar with, the consistent, the banking technologies, the environments, the regulatory systems of the global financial system are all there that we know, and some of us love and some of us don't, but they all exist as it were right now. And the other new parallel universe opening up where startups are harnessing the power of the crowd, harnessing the power of the user, harnessing new technologies like cryptocurrencies, like Bitcoin and the blockchain, and these things are now off and running. So these are racehorses now in the game, and as much as I think that we might like to think that some of those technologies are sort of nice and let's pat them on the head a little bit, I would like to make a little point about what happened to the media industry over the last 10, 20 years. The classified advertising industry used to be owned by the media industry. The media industry does not own the classified advertising industry anymore. And that was billions and billions of dollars of value. That was taken by the internet, taken by technology companies. Now, to some extent, it's taken by social media. How many people here see somebody saying, I'm selling my house on Facebook or Twitter, or go to some marketplace somewhere? And that's what's going on. And those are the kinds of things we've got to be cognizant of when we have these kinds of conversations.
And actually, it's great to kind of bring in at this point, Anna, your view on kind of the regulator, because that's also quite a defining factor, and actually encouraging innovation within London as opposed to maybe the US and in Europe larger.
So I think what happened in the UK in the past year, so the FCA kind of stepping up its game and launching a hub where startups can go to get help to get approval is...
And have you really heard that they have been getting approval?
Sort of results of what's going on haven't been published yet, but so far I guess vibe from the startups is that it's helpful. So I think the crucial part will be to see whether the sort of regulator can learn from the applications and see whether there are some areas of regulation that can be tweaked. So it makes it easier for startups to innovate, but at the same time to sort of protect consumers, because that's a real challenge, I guess, is enabling innovation, but also not letting it go too much out of hand in areas that might.
The fine line to...
Yeah, and I guess another interesting area where maybe the UK could do possibly a bit more is sort of on a European level, especially in, I guess, crowdfunding is an area that the Commission has said they want to regulate, so perhaps it would be good for a country that has had more experience to sort of lead the discussions there rather than letting it go one way and then complaining that it's not like they wanted. Maybe it's a time to get some sort of more overarching European regulation, because it would make it easier for the UK to lead globally if they have the help of other European countries, I guess.
That's great. And then, Liz, in terms of the entrepreneur and what they're trying to build, what do you think is more important? Do you think it's the glitz or the grits? Is it the presentation or is it the results that are more important?
Definitely results. I mean, the grits doesn't have a long-term future for any company. The thing that sort of I've been told by a few people over the past year is Fintech is this new industry, and I think, well, what the hell have I been doing for 20 years? We used to call it financial technology back in my day. Now it's Fintech. You know, what happened post 2008 is banks became pantomime villains, and then we had digital technologies and changes in customer behavior, and it was set up with this narrative of these, you know, banks are dinosaurs, they're going to be destroyed, they're going to be disintermediated by digital technologies like bookstores were, like video rental stores were, which I think is really, if you compare that, you have a fundamental misunderstanding of what banks are. And so the new guys, the new fintech companies are the good guys, and they're going to bring us this financial utopia, and the banks are the bad guys, and they're going to be destroyed. And that narrative is so ridiculous. You know, the reality in the future is going to be this shifting ecosystem of maybe commodity banks or maybe banks that get it, and startups and firms that pop in and up and work together and deliver better services to customers. So, but this idea of a mediator destroying dinosaurs is just a narrative that has no place in reality.
I would sort of, I'd say that there's, and certainly because of Techcrunch, we're fabulously always really interested in the companies that disrupt marketplaces. I think you're right that there is this yin and yang between, you know, the existing incumbents and the startups. I mean, I think there's two types of startups. There's ones that are going to work with the financial ecosystem and the existing financial technology companies and finance companies, and then the ones who are going to hold a 44 Magnum to their head and say, "Do you feel lucky, punk?" Certainly
we had a breakfast. We hosted a breakfast at Level 39 last year for startups, and it was about how they find funding, how they find mentoring. The number one question they asked our panel was, how do you sell into banks? How do you help us sell into banks? You know, 40% of our IT spend in the UK happens by banks. That's, you know, that's not going to go away.
No, I totally agree with you. I mean, but there are also ones, especially say cryptocurrency, that are going to sit outside. You look at the world remittance market, and in fact, there are startups appearing in world remittance.
Yeah, because that's an area banks don't want to be in.
That's a crucial thing. When you see big disruption, is it an area where the banks really want to be there? Like peer-to-peer lending, they don't want to lend anymore, right? So is it an area where they're slowly retreating and it's helping the banks the startups make noise, or is it something that
so do you think
taking away from them?
Do you think there'll be some acquisitions by banks of some of the peer-to-peer lending?
Do you think there's a risk, though, of them
Who's here from
stifling?
Zopa? Your valuation just went up.
Do you think there's a risk, then, of stifling the innovation if banks kind of in their kind of overarching structure get too involved in the startup stage?
The real problem with any acquisition, obviously, is you destroy the culture. You know, look at what happened to poor old AOL and Time Warner back in the day, and God knows what else. Other massive loads of mergers. Most mergers end in failure, or acquisitions often. But I think the clever thing to do is maintain the culture of the startup, maintain the momentum that it's already got in its existing marketplace. I mean, the stupidest thing would be a bank to buy a peer-to-peer lending service and then sort of kind of shut it down or turn it into a kind of a consumer arm or something.
What's your view then on digital currencies? Because that's obviously a prime example of the difference between trying to focus on being disruptive or trying to actually focus on the practicality.
Well, I mean, the luster has come off Bitcoin, obviously, and whoever bought it when it was $1,000 a Bitcoin is now considering it a long-term investment, shall we say. and as a friend of mine was saying, into their alcohol the other day. But it's the blockchain technology, I think, which is underlying.
Exactly. I think we were talking about this before the panel. I think every single bank has a few guys in the corner playing with Ripple.
You can't
and
tell
playing
them
with,
or they'll panic.
Yeah. And if they don't, they're lying. Yeah, I think every bank is looking at, because the blockchain does solve a lot of really sort of techie infrastructure problems that banks suffer. I think it's a couple of decades away from handling the scale and the volumes that banks have to handle, but definitely I think banks are very interested in exploring where that blockchain will take them.
So taking that view forward, where do you think is the next opportunity? We focus a lot on retail banking, but what's the next trend?
I mean, I think anything, I call payments the gateway drug to fintech, and then sort of it came out with retail banks. But I think anything that's customer facing. So I see a lot of movement in the corporate space and transaction banking. I think the corporate treasurers they have iPads, they have services on the retail side. They now want that from their corporate relationship. They want to be able to authorize payments on a mobile device. They want better client onboarding. And then outside of that, there's a whole market, like we saw with the likes of iZettle and Square. There's a small to medium-sized enterprise that isn't really being served by the big banks. I think we'll see a lot more startups offering trade finance services, offering cash management services to that small to medium-sized market coming up soon.
I agree, and I mean, in the startup space, you see tiny little companies trying to innovate around consumer payments like Droplet, which is does location-based payments. You're in the cafe, and then you've got a wallet, and it knows where you are, and you pay for the coffee. I mean, just tiny little startups innovating. Another one called Smart Trade, which is innovating just amongst plumbers and electricians, so it makes their lives a lot easier. And of course, you've got the big ones like the iZettles and the Square in the US. But the payments, obviously, massive. I mean, Go Cardless, of course, in the UK, doing amazing things. I mean, the other thing is obviously Forex, so transfer-wise, this is our unicorn now out of Europe in the fintech.
And we can't talk about, we had International Women's Day and we're looking out into the audience now. I mean, one of the things that, Liz, you were quoted as saying is that one of the biggest forms of disruption is a female voice. I mean, what's your view on diversity?
I go to a lot of conferences. I go to a lot of conferences that cover European banking regulations, and you just see seas of middle-aged white men in dark suits, and which are all lovely people when you meet them individually. So I'm not. Not
that alienating ourselves, yeah.
But yeah, so when you see, I think. When men see an all-male panel, I did an event at Finextra 2 years ago in Barcelona, and a woman from Citi dropped out. And I realized at the end of the day that if you don't count me, who's hosting the event, there were no women on stage at all. And this was on mobile banking. And no one commented on it. No one said anything, because at a banking conference or a tech conference, the two alpha males, the alpha male-dominated industries, seeing all men on stage or in the the delegates, doesn't strike you as strange. An all-female panel would make the evening news. So if this industry is harping on about disruption, get more female voices talking, because that's one of the most disruptive things you can hear in banking.
And the situation isn't great. So we looked at the top 50 companies by funding this year in Europe. Only one had a female CEO, and I think the number of key executives they had listed for women was 5%, so roughly 11 out of 222, which is really bad. It's even worse than if you look at tech and finance combined. So I think if you go on saying we're the new financial, we're the new banks, and you should try doing something.
What was the thing? I retweeted you that came out, it was shared on Twitter, that there are more men named John that are CEOs than are women who are CEOs. And it's just... That's wrong. It's wrong.
And broaden
if you're a John, hang your head and say, I'm thank God that I'm Mike. I was just in Cairo, and there was a company called wallstreetchamber.com, a couple of guys and a woman founder, and I think if you look both from the diversity issue and from the banking issue, especially in emerging markets like the Middle East, Africa, etc., women are massively part of the banking process because they control the household. And when you look at those kinds of cultures, you absolutely have got to think about these things. Mobile is so important now, of course, in emerging markets. Everybody's doing their banking on mobile. You look at M-Pesa, how incredibly transformative that has been in places like Kenya. So, yeah, I mean, it's absolutely something you've got to take issue with.
Maybe you need to look at both sides of the equation, because isn't there also a risk that people tend to invest in people that are more similar to themselves? So we also need to make sure we get more women also investing into that pipeline. So I'd just like to sum up that we spent the last 20 minutes trying to separate fact from fiction, as well as identifying interesting and exciting opportunities left in the space. So thank you very much to Liz, Mike and Anna for such a fascinating discussion. Thanks to Innovate Finance for making this happen, and thanks to you for being a great audience. Thank you very much.